This is Alan Bush with ADMIS. In the stock index futures this morning, we are seeing prices sharply lower for a variety of reasons. For one, there is news that Argentina may have defaulted on their debt. Also, we have expanding banking problems in Portugal. So quite a bit of long liquidation coming in this morning in the stock index futures. Also, there's some talk that the Fed could raise interest rates sooner than expected. This after the Fed's statement from yesterday, although there were very few new bits of news in that statement. The Fed did say that they were to taper their quantitative easing program by $10 billion down to $25 billion per month, and this was as expected. So even though we are sharply lower, I think there's a very good chance that we will see at least some partial recovery later this afternoon. We still feel that even though we have these ongoing geopolitical events, that once they subside, it'll be the interest rate environment that takes over, that will take stock index futures back to new highs for the move, especially in the S&P and in the Dow. Over in the foreign currencies, we are seeing the dollar index trading higher and into new highs for the move. This with the ongoing geopolitical events and this news about what appears to be a default on Argentine bonds. So flight to quality dominating currencies, taking the dollar index higher. Some pressure in the British pound after UK house prices increasing at a slower than anticipated rate. Pressure in the euro currency, this after inflation in the eurozone increasing by a smaller than expected amount. In fact, at the smallest increase in 5 years. And we are seeing some weakness in the yen. This after wage growth in Japan showing a smaller than expected increase. We feel that the yen will probably continue to work lower. We do have some technical breakouts to the downside earlier this week. Fundamentals remain bearish. We still feel that the Bank of Japan will be forced to add more accommodation to their banking system, which is bearish for the yen. And interest rate markets, this is the second day of lower prices. This after new highs for the move that we saw earlier in the week in the 30-year bonds. However, we are now into some major areas of support, both in the 10-year notes and in the 30-year bonds. So even though we are lower in these today, I think we will see at least a partial recovery later this afternoon, especially at the long end of the curve. Still thinking that the main trend is higher, still thinking that this is a trend that will last for quite some time, probably through this year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.